Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Market Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City wheat. It was here last week that I saw the fairly obvious April to date head and shoulders pattern with a neckline that had been just below most of the very recent market action, currently at 1146. In last Friday's commentary, I said, and I quote, "Of all the days today, this neckline is being tested, and it seems to be a very important test." Now, head and shoulders patterns are traditionally seen as topping actions, and this one would fit the bill, but sometimes they turn out to be bullish continuation patterns. Thus, take care in case it does turn out to be a bullish continuation pattern. However, just in case, I'll place two prospective targets below. Primary target X would be in the 998 area, and the secondary target X1 would be in the 863 area. Please note that these two are just prospective targets I have placed just because the market has breached and not broken as yet the neckline for this head and shoulders pattern. I will leave you with the same last thought I have over these past few weeks. Please just remember, between 1001 and 957 we have some very heavy duty supports dating from 2011 and 2012. It is these that are underpinning the current market and its rises, and they will not be easy to dislodge. That's the end of the quote. Well, there's a lot there to process. For starters, last Friday was indeed the breaking of the neckline of this head and shoulders top. This past Monday saw a move down through the rising medium moving average, currently 1089, plus the 50% Fibonacci line for the whole of 22 at 1064. Today we saw prices reach down and have as a low 998 and a quarter. Thus, I think target X, the primary target for the head and shoulders top, has been achieved. Actually went below 998 and a quarter, went down to 997 and a quarter. So between the time I wrote this and when I've said this. Anyway, target X as primary target for the head and shoulders top has been achieved. Below now there is what I refer to as some very heavy duty supports between 1001 and 957, which include a load of highs from 2011 and 2012 plus the 50% Fibonacci line of the big March 21 to May 22 move at 970. If that wasn't enough, sneaking up from below we have the long moving average, currently 939, about to enter the frame. From last week until this, we have seen the market drop down through a fairly free area. Now we will see the resilience of the bearish incentive is matched by the heavy duty support below. Just remember, harder to get secondary target X1 is below in the 863 area. One final thing to add, and this is an interesting afterthought. If you look at the May high to day action as a possible bearish halfway hesitation, then you have a potential target X2 in the 970 area, deep in amongst that congestion band. Minneapolis wheat. Please kindly still ignore the colour change in the labelling, with just my charting system playing as usual silly buggers. There is no special significance in the colours. Okay, first off, the March 2021, January 22 bullish Andrews picture, which has been so influential, pointing the way higher for so long, has been breached and likely broken. I suspect I will be retiring before the next commentary. Next, I pointed out last week that the recent move lower had indeed been a pullback, but that it may well be turning into a bearish move, if not into a full bearish market. Right now, as in last Friday. Let me explain. The market had been heading lower in a fairly free zone until it met the combination of supports of the March high at 1212, the middle tine of the bullish Andrews pitchfork, that's currently at 1248, and the short medium moving average, currently 1210. Some of these were, at that time last week, breached, broken even, but together they have eroded the bearish incentive, halting the decline and allowing the market time to think whether it should continue to move lower or sideways, or maybe even upwards. Now for the juicy bits. Said this last week, and I quote, "I have previously seen in Kansas City wheat, though not so clear in Chicago wheat, a big head and shoulders pattern forming, almost formed since about mid-April. Minneapolis wheat is similar. The differences here are not as pronounced as you would think, but we do have some differences. For example, the left shoulder is split and the right shoulder is diminutive. Nevertheless, I have drawn a neckline currently at 12.16. That's where we are at the moment. Yeah, which is closely allied right now to the rising short medium moving average. This neckline has been tested since this past Wednesday and today. That is Wednesday last week and last Friday. We have started to punch down through it. This is just the very first day, so it is by no means confirmed. Also, please remember, though head and shoulders patterns are usually seen as bearish reversal actions, and that would fit in with this scenario, they can also be seen as bullish continuation patterns. However, that all being said, I feel obliged to set out prospective primary target X in the 1089 area, and a secondary and harder to get target X1 in the 973 area. These are big asks of the market. As the first one, target X would see the market on the very edge of the current market driver, the April 21 to January 22 bullish Andrews pitchfork, and target X1 would see the market clean out of it. End of quote. Okay, I hope you got all that. Well, this past week prices have dropped down and out of the head and shoulders top, then through the April 2008 high at 1166, the 50% Fibonacci line for the whole of 22 at 1139, the rising medium moving average currently 1130, through a small congestion zone 1076 to 1083, and ended up sitting on a congestion zone 1055 to 1066. Perhaps the most significant event is that we have breached and likely broken the April 21 to January 22 bullish Andrews pitchfork, but moving well below the lower time, currently at 1097. There is still one significant piece of support below, and that is the slowly rising long moving average, currently 1050. This fall dropped down and reached target X, the primary target for head and shoulders top, in the 1089 area. Target X1, the harder to reach secondary target, is still below in the 973 area. I have to say, I am not overly confident the supports below holding the market from reaching target X1 right now, but this could change. And one final point. If you look at the May high to day action, especially if you squint, you might see a possible bearish halfway hesitation, mini descending triangle, whatever. It's a halfway hesitation, bear flag type action. It is not a good example, but it may well be there. If it is, then we have a possible target X2 below in the 1033 area. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.